The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 6. You get the NASDAQ down 5. S&Ps are off 3.5. We have gold flat, $12.56. You get silver up 3 cents, $16.87 an ounce. Platinum is off $3.50 at $9.27 an ounce. Copper down 2.5 pennies, $2.62 a pound. You have the light sweet crude market flat at $48.70. Notes and bonds, folks, bottom line, they keep rejecting lower price. You get the note market up 4 ticks, 125.19. Bonds 30-year up 13, 152.13. And good old King Dollar. King Dollar just can't get up into that 100 mark. We're at 99.020. The euro's trading at 108 to the U.S. dollar. The yen is out there at 112 to the U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at TFNN, Kevin Hinks, Scott Connor, they get an amazing show, swim lessons, 12 to 1 Eastern Standard Time. You want to understand options upside down, folks. It's a great program. The platform, Thinkorswim platform, an outstanding platform, folks. You can test drive it right here, right now. The way you do that, hit the banner in the very top of our website. Bring up the platform. They'll let you trade with paper money. You can follow along with Kevin and Scott each and every trading day. Bottom line, amazing program, amazing platform. Kevin Hinks, what's going on?
Tom O'Brien, good morning. How's everything?
Well, everything in the world is great. We got the VIX that was under 10 yesterday. That means that nothing is ever going to happen in our lifetime, Kevin. Everything's complacent.
And we all know that to be true, right? Of course.
I'll tell you, it's pretty wild, man. You got to love it, right? I mean, hey.
We've got this is a big week.
Yes.
Obviously, and you're exactly right. We have a 2-day Fed meeting that will produce nothing.
Yeah.
Then we've got payrolls on Friday. And I think payrolls need to bounce back from last month, right? Everyone put out the excuse last month that it was weather. Well, then they need to bounce back this time. Or here's what I'm going to tell you, Tom. Remember last March when we talked about the Fed meeting and we talked about what happened between the probabilities of a rate hike and then what ended up? Well, we need to start seeing some real data, or this June meeting that is currently at 67% is going to fade.
Yes. No,
right?
And folks, what Kevin's talking about, these numbers change very quickly.
Right.
And the Fed fund futures rate. It's amazing how quick the market can turn. But it makes sense. I mean, it totally makes sense. Even that GDP number, it's like, okay, well, everyone's going to give that the benefit of the doubt because of the first quarter. Normally the first quarter is light anyway, but the bottom line
there's a seasonal component to that, absolutely.
Yeah, but if you get a weak payroll number on top of that, that's going to make a difference. And these bonds, they're, like the bonds keep wanting higher price. It's like, and after I saw Mnuchin yesterday saying, okay, he's really going to go after a long bond, then that's starting to make a little more sense to me because I think if they do a 50-year bond, man, it's just going to, bottom line, that means it's going to be less 30s. So it's like, okay, I can see that going up now. Do you know what I mean?
Right.
So that's going to get intriguing, man.
Right, but this market's going to get interesting, and we've been talking about on swim lessons how all the forward-looking numbers are strong, but at some point, the actual numbers have to start showing up. And these forward-looking numbers have to keep their momentum. So I'm just really focused on. You're exactly right. There's nothing happening in this May meeting, but how she sets the table for June.
Yes, no doubt. Now,
right.
After the close today, we get the King Dog Apple, 4:30. Right.
Right. We'll be extremely active today talking about that. We'll be looking at all the possibilities and looking at it very hard. And it'll take over the show at some point.
That totally makes sense, man. Apple folks, bottom line has been 14% of the rise inside the NASDAQ this year. So, and inside the NDX 100, rather. So that.
And think about this, Tom. A week and a half ago, I was doing a show, and Apple's front month implied volatility was about a 25.
Yes.
And I joke that we don't guarantee much, but I guarantee that number is going to drift higher. It's a 44 this morning.
Wow.
Right. Almost a double in terms of implied volatility.
And folks, that's what's so important about options number one. And if you want to trade options, listen to the show, okay? Because the bottom line is that there's so many different facets inside one option. That's what's so intriguing, Kevin, listening to you and Scott. Do you know what I mean? Particularly, you take one, and there's just so many pieces of it, and you can trade every piece of it, which is amazing.
Right.
Yeah.
And what we teach really about earnings is timing.
Yes.
Right? It's the move. It's timing. It's striking at the peak in volatility. And, volatility is low around the floor. The VIX is 1031 right now. But make no mistake, front-month volatility in Apple is right at the high end of its range here at 44 vol.
Wow. Okay. Hey, it makes sense. I heard this number this morning. An analyst was on saying, hey, I'm really bullish on Apple. And the guy says, well, I can see that. They have $250 billion in cash. I don't blame you. But their PE right now is running 18. And, the bottom line, 6 months ago, the PE was only 12 and a half.
Right, exactly. Oh, by the way, it's gone from about the high 90s to 147 during that period, too. So,
wow.
Yeah.
Amazing. Listen, folks, right here.
It's going to be fun.
Big time. 12 to 1 Eastern Standard Time. Remember, you can get it right on your cell phone. You go to TFNN.com, hit Tiger TV right on the right-hand side. Kevin, you have a great one, a safe one. Look forward to the show.
Thanks for having me on, guys.
Absolutely. You stay right there, folks. Tommy and I are coming right back. Dow right now is up 7. Nasdaq's down 7. S&Ps are down 4.
Just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, yeah, he's crying it. We're back.
Oh, it's
It's a
beautiful.
quick break. You take your earphones out and you forget we're doing a show there.
Welcome back, folks. Tommy O'Brien, we do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 11, NASDAQ is down 6, S&Ps are off 3.5, and Apple is the day. And unfortunately,
It's the dog, it's the day. You keep picking different words. I was listening to that.
It is.
It's
And
the big dog you call it.
Unfortunately, they come out at 4:30.
Okay, I didn't know.
They
I
got a
didn't have
nerve.
Bloomberg. I was talking about this morning, maybe.
Yeah.
I said, though, I wasn't sure what time they came out at, whether 4 to 4:15,
Yeah.
so 4:30.
Yeah.
Hey, maybe you get in there and trade some of those weekly binaries, right?
Yeah,
there you go.
right.
Or you
And
just trade an option like we were talking about. Get in there and trade an option.
That's right.
Yeah.
And then tomorrow night, you do have the chance to do the volatility trade in the Nadex platform on Facebook. Facebook comes out right at 4 o'clock, just like Google.
Sure.
And they're both at highs, big highs too. So what is whacking the NDX today? And watch this. This is pretty wild. Actually, it's not even on the top. Oh, this is interesting. It's probably not in the index. I see. Okay. So watch this. It's AMD, which is not in the NDX, evidently, but the rest of the chips are getting killed. I know, exactly. Down 246. This is like, when I was bringing this up, right? Yeah. Last night. They come out with numbers last night. What was shocking to me is that they planned on losing money anyway. But what was shocking is that when I brought up the chart, this company's been losing money for a while.
Okay.
And the stock still went. Okay, so here it is. They were supposed to lose 4 cents. They lost 4 cents.
Sure. Yeah, the revenues were right on, just so revenue
exactly.
984 estimate.
Exactly.
984.
So it's not a company that's been making money, right? But guess what? Evidently, the market thought that they were going to make money at some point. So watch what this.
Hold on, before I'm just jumping around to even say, because something was. They're saying that revenue misses estimate though, but I see the revenue.
Yeah. No, I listen.
Okay, go ahead.
And so. What you have, which is just amazing, you bring this back, and you take a look at it. This stock, okay, let's not even go. Let's go just the beginning of here. That's 2017. It doesn't even matter, right? No, November 2016. It's at $6. The stock doubles to $15. They still lose money.
Sure.
This thing's and you can see. You want to see
No, that can happen when it gets built up on optimism without actually, they call it the soft data and the hard data. I bet there's a little soft and hard data going on there where the soft data was saying, for whatever reason, regulation, rules, technology, trade, I don't know, right? But
Greed.
something on that, I don't, okay.
Yeah.
That, we'll go there, sure. That's not where I was going.
Well, I guess...
There wasn't greed to cause that to go up. There were expectations that the losses were going to turn around. That was my point that I was going to make, which doesn't factor into the greed. It's expectations differ from actual results. That's not... We can have the greed debate that factors into it too, but that's a different debate.
I guess when people... my take on that is when people buy stock, it doesn't matter. There's no momentum to say, okay, I'm going to stay in it anyway because I think it's going to be worth more money.
But that's not what I'm talking about. That's my point. You're not hearing my point.
I understand that. No, I understand what you're talking about.
Two completely different points.
Right.
You said and greed, but that's not, there were factors of expectations. Greed isn't an expectation. That's my point. There's factors of expectations that caused it to double from the election to March. And then as reality sets in, and maybe some of those expectations are coming to fruition, as we've seen in many things. That's my point. That doesn't factor into greed. I get the greed part, believe me. Greed is a player in almost everything that goes on in the market.
Some of the high volume stocks out here, you get Ford down 44 cents. We have Pfizer off 70. Tenet Healthcare is up. That's a big one. That's up 290. We'll see what's going on there.
They have earnings as well.
You get Coach up 376. So they're back to buying pocketbooks. Tenet Healthcare. Oh, that's in a dog anyway. So that's been down from $22. Made a low 2 weeks ago at 1466, and
There you go. No. Yeah, here we go. Earnings. Oh, no, there's earnings. Maybe keep going.
There it is.
Okay, yeah.
So first quarter revenue, net operating revenue, $4.8 billion. The number was $4.81 billion.
Here's they only lost, I think, 27 cents versus 52.
Okay.
That's the big one, probably. That's a big. Expecting to lose 52 cents, you only lose 27. You know.
Yeah.
Should matter.
No doubt. So let's go into the NDX 100 and see NVIDIA. Let's see, it's
NVDA.
Yeah, I just want to see what the second one is.
Okay.
So you get Micron down 2%. What's that, Charter?
I believe so.
Yeah. NVIDIA is down 2.1 or $2. That's nothing. That's 2%. Yeah, that's nothing. It's not doing much. Gold contract. So we get the Fed meeting.
So it's a 2-day meeting. It starts today. It goes through tomorrow.
Okay.
And there'll be an announcement at 2 o'clock. No press conference, but 2-day meeting starts today, but they have no press conference, and they'll have their announcement. As you were saying in your newsletter, they expect to keep those rates the change. Can we look at the Fed futures, Fed funds futures?
Yeah.
I think it was around like 13% last time we took a peek at it, 12.8. So they're still pricing in pretty similar. And you can see these flat lines. Nothing has changed in the probabilities of what's going on since about March 15th, which is interesting.
Right.
Yeah. It makes sense.
And June's at 70.
Yeah.
So that's a big number at 70.
Yes.
No doubt about that.
Definitely.
Our phone number is 877-927-6648. What is Apple supposed to make anyway? This is going to be really intriguing. So the the option setup for second quarter earnings implies a 3.6% move.
Okay.
Now that means up or down, folks.
Yeah.
Just how you understand how that goes.
And 3.6%. Talking about $5 at least, just to put things. I mean, that's a decent move on Apple.
It is a decent move. So you're at 147, and yeah. So look at that. Even if it goes $7 down, it's still only where it's been.
Yeah,
and
not dramatic.
It's going to be intriguing here to see if, in fact, this baby closes under this 147.20 today.
Yesterday.
Yeah, the high of yesterday.
Okay.
Let's go to Mike in Somerville. Hey, Mike, what's going on, brother?
I was just telling Steve I'm having withdrawals. I haven't listened to you guys for about 3 days. I'm going out of my mind.
You're retired, man. You have things to do. You have things. You have check off. You have your grand list, I'm sure, of things you're taking care of.
Hey, listen, I have to tell Tom because he said about Chewy.com. I got a puppy. I bought a puppy 2 days after I retired for my daughter. So
that's awesome.
Perfect.
That's awesome. What kind of puppy did he get?
It's a Shizon. It's half a Bichon and half a Shih Tzu.
Oh, that'll be fun.
That's awesome, man.
That'd be fun. That's great.
Not like puppies.
No, totally. And not only that, small dog is cool because you can basically take him everywhere too.
Says the guy that only has big dogs.
I know.
You talked about Chewy like the day, and the girl, the breeder turned us on to that Chewy.com, and then you talked about it like 2 days later.
Yeah, it's a good business model, no doubt. Hey, you stay right there, Mike. This is Tommy O'Brien. Tom O'Brien, we do appreciate you growling and prowling with us. Dow Industrials right now are up 16. NASDAQ is down 3. S&Ps are off 3. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 15, NASDAQ is down 2, S&Ps are off 2. We got our man Mike from Somerville, and we are going to be talking gold. So, what are you doing out here?
All right, you want the list of the trades for the week?
Oh, boy.
How long is that list? What do we got going on?
Okay, I got a gold daily, $12.60. I got a silver weekly, $17. And I got a gold weekly, $12.64, and a short and the small caps at $1,400 for a weekly.
He's got things spread out a little bit.
Yeah.
But I like it. I like it. I mean, that's, you got $4 or $5 for the day in gold. That's in the realm. I haven't even pulled it up yet, but you're not shooting for the moon, which is important on these.
Right.
You got $10 on gold for the week. That's in the realm for sure. Let's see where silver is. You want to check out silver? Where's silver right now? SI.
Yeah, this morning I was up on silver. It was up actually in the morning, Tom.
It's only 18 cents. Yeah, silver was above $17 this morning, 17.01.
So what silver do you have? 17?
17 weekly, though. It's a weekly.
Oh, good. Okay. Because we'll get movement. Oh, this is pretty cool, actually, what's happening with silver right now. Let's see if... So 1683 right now, right where we're at, that's testing the close of yesterday. And it's got big volume there. So you might get a rejection right now. Let's see. Oh, the 10 minutes just starting. You get 9 minutes. This is interesting, right, where silver is right now, actually. We'll see whether it's going to hold. I suspect what we're going to have is that the statement of the Fed tomorrow will kind of give us an idea of, what they're thinking.
Yes.
One of the other things that's going to be a wild card here, too, folks, okay, is that I was talking to Kevin Hinks about this. Mnuchin came out again this morning.
Steve Mnuchin.
Yeah, and they're going to go after long bonds. And if they go after long bonds, meaning that if a perpetual bond is like a 50-year bond, anything 50 or older.
Let's go for 100. Why not?
They can.
Right,
they can go for 100.
It would be 50 or 100 probably.
If that happens, what we'll see gold go a lot higher. The reason I'm saying that, the theory would be go like this. So what happens is that I can see how it can be justified because Trump wants to do $1 trillion or whatever he wants to do, right? It's an easy way to get the money. To turn around and say, okay, interest rates are low. Lock it in, right? What would happen there, though, is that, okay, you get long money, you spend it, the 30-year more than likely would go much higher because right now there's still not enough 30-year bonds in the market. The market wants more of them, meaning that you have insurance companies that have to pay out insurance policies in 30 years, and and they try to match up the duration with what their liability is. So that's the biggest, incentive that I can picture. He can make a case for it.
It's not. With the rates as low as they are.
Exactly. I'd go for a 100-year bond.
That's what you couldn't make a case for if rates were at 10%.
Right.
Who would ever want a 100-year bond? It just wouldn't make sense.
Right.
But yeah, and realistically, that's what just from. And a lot of people on both sides of the aisle have been saying that we should be spending more money because we can take out money and spend it at almost 0%.
Right.
And, if you're going to spend money on infrastructure, now's the time to do it. Right. You can get growth in there with some spending and not be paying an arm and a leg.
So,
Tom, do you actually think there would be a demand? I mean, not a person couldn't buy 100-year. Who would buy? Like towns would buy them.
The insurance companies would.
Yeah.
50 years, they do it big time.
Yeah.
Because the insurance company, what they try to do, they have a liability out there. So picture, they're in a beautiful situation. We buy policies, right? Let's picture we're just your kid, you're buying policies. They have liabilities, then they match that bond with the liability, and that's a clean. It's really delta neutral as quick as they can get, and they make a spread on it, and that's where those come in play, and it's a good situation.
Yeah. Think of it more from balancing almost a balance sheet from a corporate perspective, more than because it doesn't make sense when you try and wrap your head around it. Saying, is there a market? We barely live 100 years, let alone 50. That's a lifetime, whatever.
Right.
But think of it more of you don't even necessarily have to hold it until expiration, right? It's something that you're holding. It's a value on one side of the balance sheet versus the other that then, as you move out those policies, then you sell that 50-year, right? So it's just another instrument versus you buying it and then you're waiting for 50 years for it to expire. It's kind of another instrument that you get to use that allows you to push that debt off further, though, at lower interest rates.
Right.
Yeah.
Right.
So, Tommy, think about it. Think about somebody that gets their retirement right now.
Yes.
Now, you're not going to put your retirement with a financial advisor that's going to put it in the stock market. I wouldn't anyway. So
depends how old you are, in fairness. I mean, if you're retired right now, yes, I would be very, very, at least, wary. And with spikes up on my back, if I had that money and you don't have a lifetime to earn another retirement savings, because
you need your principal.
That's right.
And you need
principal protection.
Whatever interest rate you get, and you want that to be solid. There's no doubt.
That's why we team up with people like Everbank just to throw it in there. Capital protection for sure.
Yeah, but you don't want your money to go down. You want to get some kind of hopefully you get a little bit of income off it, but you don't want it to go down. And what are the odds right now with the market at an all-time high? It's scary. I wouldn't give my money to anybody right now.
Well,
I agree.
Yeah.
I
mean, what you're talking about, Mike, the way to put it, right, is like the value of a dollar that you make versus one you lose. We have these conversations, right? As in, let's say you have $1 million saved, right? You have all the money you ever need. Right? You have all the money. You can do anything you want.
Right.
What's a dollar worth to you that you gain? It's actually worth nothing.
Right.
Okay?
Right.
But what's a dollar worth that you lose? That could be worth everything.
Right.
So you have to always be analyzing, just because you have, let's say somebody comes to you and they say, and they can lock it in, I have a plan that 95% of the time is going to make 100 times on your money. I mean, it's just this gold find, right?
Yeah.
But you need to risk $1 million on it.
Yeah.
You should never do that. Because guess
Exactly.
what? Your opportunity of making that money is not worth it if the loss is going to feel so much worse. Every dollar you lose is going to affect your life versus every dollar you make actually will have no effect on your life. So that's where you want to preserve that capital.
Right.
Exactly.
Yeah, but Tom, see, I'm from Somerville, so I always think of the Bernie Madoffs of the world. Even before they came there, I always knew they were out.
You should, man.
Yeah.
You're the only one that can protect your money. That's the bottom line. No matter what kind of regulations get passed, unfortunately, you got to protect your money, man. You got to have the whereabouts to see red flags as I scream them out. When things don't make sense, understand what's going on because it's your money and nobody's going to protect it but yourself, unfortunately.
And realistically, what ends up happening, I think, is that it's not that growing up in the city, you're not going to get hung up in as many scams because you've already seen so many scams. So
there you go.
What does happen, unfortunately, is that you see people that are very well educated. They've made good money, but they grow up in a trusting atmosphere too, so they trust people more.
So here's where I'm going to tie it back to what you wanted to bring into the last conversation.
Right.
Greed.
Yeah. Oh, yeah.
Because greed blinds everybody.
It is the greed. Oh,
Bernie
yeah.
Madoff, you had some of the brightest minds in Wall Street that were blinded by greed.
Right.
Because they didn't want to ask questions, didn't care about asking questions.
They were hoping they were going to get out first.
So greed can get us all, for sure.
You're right, Tommy. You're right. You're so right with that one right there.
So just jump in, Mike. We pulled up these charts just so people can see them. So here's the daily, right? We're looking at 1255 right now. So it looks like 1260 you're in on the daily. So since we've pulled back a little bit, that's quite a risk reward because we looked at yesterday. You're looking at $5 in gold before the end of the day. You got about 3 hours. That's quite a risk reward. Jumping around on the weekly, here's gold. Here's his 1264.50, risking about 28. And then here's the silver trade, $17, risking about 31. So they're all in the realm, Mike. We'll see what happens, man.
All right, guys.
Have a great one, man.
Thanks, Mike. Have a great day.
Stay right there, folks. Tommy and I are coming right back. 877-927-6648. Right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 12, Nasdaq's down 5, S&Ps are off 3.5. Now, this is just
speaking of bonds.
Yeah,
right? Sure,
speaking of bonds, look at this thing. So the headline, folks, is hedge funds pile into long bets on bonds just as dangers build. The fast money in the $14 trillion Treasury market may turn out to be too slow. For the first time since July, hedge funds and other large speculators are bullish on treasuries across the yield curve. U.S. Commodity Futures Trading Commission data show the shift in 10-year futures was particularly striking, with the group adding an unprecedented 255,943 net long positions as of the latest figures covering the week April through April 25th. This is wild.
That last line, go for it.
Their bias is so skewed toward gains that the group is the most vulnerable to a bond market sell-off since 2008.
Hedge fund money is usually smart, though, right? I mean, that's what comes with this, usually.
Yeah. It's that whole thing about too many people on one side of the boat, too. But, bottom line, in 2008, they were right. Bonds just kept going up.
Yeah.
You know what I mean?
Yeah.
So the change of heart came at a risky time while almost no one expects the Federal Reserve to raise short-term rates. Traders are betting that officials will reiterate a plan to hike twice more this year and potentially deliver further signals on their intention to trim the central bank's balance sheet. It's going to be interesting to see how that shakes out. That you can see why. Let's just go over to that 10-year again. You can see 5 times last week, man. Look at this. Every single time,
Quite a little range.
It is. From the 24th of April, every time it comes into the top of the consolidation, the consolidation that took off, there's buyers there, man. That's the bottom line.
Sure.
Yeah.
And we look at those world rates consistently, right?
Yeah.
I mean, there's opportunities to go lower.
There are. We're at 2.3%. France is at 0.8%. Germany's at 0.3%. Italy's at 2.2%. Spain's at 1.6%.
Yeah. We're talking about powerhouse countries, not right.
Yeah.
That you can only get that for.
Right. So. And, we go over to the euro. So the euro Sunday night is going to be the number, folks.
Ooh, baby.
We're at 109 right now. That took out the consolidation of 108.
So you think this is going to be the calm before the storm, right? Everything's just going to kind of hang out maybe up until, because we're already on Tuesday.
Right.
I think they have to stop campaigning probably Friday.
Yes.
So but as we approach the end of the week, unless something dramatic changes, unfortunately, God forbid we have any type of attack or something that might change what they think, but kind of just wait and see what's going to happen. Because you should have your ducks in order right now in terms of if you want protection, you should have it, or what's there. So we'll see how it shakes out. But I could see, just especially Thursday, Friday, maybe you got to move, but probably just waiting unless we have any type of changing event. But no matter what changes it, the polls are the polls. People kind of know where they stand. We have the expectations. That probably won't change dramatically, and we'll see where Sunday falls.
Yeah.
Action.
And then we're going to see what the market thinks about it, which is going to be wild watching that shake out.
True.
What I mean?
And it will matter, too, in terms of what the percentage is, actually. Because I think it has to do with maybe they can lock up more seats or something, and even just the sentiment, where if Le Pen is even closer than she's supposed to be, maybe that'll be a little bit more fear in the market, that there might be more of a stronghold of the Nationalist Party that, I'm reading that. Dave White and his man, nod to him, talked about it a little bit, and there are screens where, anything away from the expectation, which is that it'll be a Macron pretty decent win, I think, could have just market-wise some implications to say, hold on, maybe it was stronger than we thought in France, then maybe the next election might be stronger than we thought too, and maybe there's an underestimation of the risk that's actually out there.
Right, no doubt.
It's interesting, yeah.
If we go over to Europe right now and go take a look at the UK first. Europe was closed yesterday for May Day. UK is up $39 right now, 72.43.
And our man John Logan, he's traveling over to the Philippines. He didn't do his 9 before 9 this morning, but he's literally en route, I believe, and he was talking about most of the world actually has a Labor Day yesterday, which we don't have. So a lot of the world was actually closed yesterday from Labor Day. Interesting, but...
Yeah, that is.
I know.
We go take a look at the DAX in Germany. So the DAX in Germany, that's at highs right now. I think it's trying to peek its head over, we're 12,484. The 486 is the high. Look at this hit, 485.63. Let's go take a look at IBM. IBM hasn't been able to catch a look at this. It's still
sliding from those earnings.
It is. It's still down at lower levels. No doubt about that. Let's go to Tom in Wellesley. Hey, Tom, what's going on?
This is Tony in Wellesley, Tommy.
Tony, what's happening, brother?
Is it time to buy Nugget yet?
Well, as long as you understand that Nugget is a daily investment vehicle. Nugget, folks, is the Direction Daily Gold Miners 3 times leveraged position of the New York ARCA Gold Miners Index. I like the trade right here. You
like it at this price?
Yeah. It's already moved, but the bottom line is that, this thing is down. It came down yesterday, closed at a low. What you wanted to see here, let me go to the GDX first, because the GDX is what it trades off of. So the GDX yesterday came down with 67 million shares. It was going into 150 million. So that is a nice setup, okay? What wasn't a nice setup yesterday at the close is that it closed at its lows. This morning, what we've done, we've tested that. You've tested it with maybe lighter volume. We'll see at the end of the day. It's definitely going to be lighter volume than 150 million. And the GDX is already inside the $21.68, which it broke. So that's saying to me that now it's going to try to get into 21.95, and we'll see whether it can get any juice and get up to this 22.43 area. The largest weighting structure is Barrick. And, Barrick's still been a dog, but the volume's died tremendously the last 5 days. It came down hard at 51 million shares to 1686. Yesterday, you did 14 million. So Barrick's going to have a hard time getting inside again the 1686, but it's trying to make it. Now, Newmont, which is the second largest weighting, is looking like a much better dog. Newmont's inside its range of 32.54. So.
Okay, thank you. Can I ask you one other question?
Absolutely, man.
VXY, I kind of like that.
VX.
VIXY.
B as in boy?
Victor, the VIX with the
VXY.
Y.
Maybe VIXY, VIXY, right? Is that VIXY? Yeah, that's the multiple VIX, I believe.
Okay,
right?
so this is the Pro Shares short-term ETF fund seats daily investment to correspond to the prominence of the S&P VIX short-term index before fees and expenses. Okay, so you're $12. I see. Okay, so
The VIX is so low,
It is.
It might be.
I know what you're saying, and this product here, I don't like trading. The reason I don't like trading the VIX is that there's no doubt that the VIX is low. What the difference is that when I look at price and volume, like I've already made a calculated guess as to what I think it can do. What happens with the VIX is that it always is going to go up, but it just comes out of nowhere. So, so it's a different trade, and I just don't like that.
I would just be so quick if you ever do it as well, Tony, because when it spikes higher, it always spikes back down. So if you make those trades, get out of them when you get a profit either way, because the spikes are quick for sure. They are. Just have your order in somewhere, and then that can work. But
take your money and run.
Take it and run for sure.
Thank you. God bless.
Thanks, Tony.
Have a great one, man. Have a safe one. Stay right there. Tommy and I are coming right back, folks. Dow's up 20, Nasdaq's down 2, S&Ps are off 3. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, as you come over to our front page of TFNN, our man, Mr. Andy Hecht, he started a new newsletter yesterday. He's going to have a great show on this afternoon. You can test drive his newsletter right now, Daily Essential Equities. He's going to have a workshop tomorrow night for his subscribers. Bottom line, you can get 20% off. Test drive it. Get a money-back guarantee, all of the above.
Yeah, and tomorrow night he's going to be talking about opportunities in energy equities. He's going to be taking a look at oil. The newsletter is equities, ETFs, options, not futures on commodities, you know, because a lot of people, they're really not trading hardcore commodity futures. And Andy's bringing his knowledge of those commodity markets, whether it's, you know, steel stocks, energy stocks, oil stocks, any company using oil, right? So he's going to be talking a lot about oil in there. The sweet spot of $50 in crude. Kind of, we've talked about that a little bit in terms of everyone's kind of happy at $50. The producers, that way too many pumps aren't coming on the market. But he's got an hour-long workshop set up. He sent me the presentation. It looks great. He's got 20, 30 slides already, an hour of action. And if anybody watches this program, they know he does a great job, of course.
Right in the front page of TFNN. Let's go to Tim in Cleveland. Hey, Tim, what's going on?
Hey, how you guys doing today?
Morning, doing great. Yourself?
We're chilling out here in Cleveland.
That's a beautiful thing.
We could use a little chilling out in Florida, but that's all right. We can't complain, for sure.
Oh, yeah. Hey, listen, I just subscribed to your newsletter. I was looking it over, the gold report, and I'm in Rand Gold right now.
Okay.
Was kind of thinking a couple of things. One, I got a small profit in now. I was thinking, well, should I hang in there? Should I sell it and maybe move it over to one of your picks in your gold report?
No, stay right there. Rand Gold is one of the strongest gold stocks there are. Yeah.
Oh, really?
Yeah. This is a beauty, man. You know, now it's at the lower end of its consolidation, which is like that 83 mark. But this is one of the strongest gold stocks there are. Yeah.
Okay.
When this thing moves, man. I mean, I'm sure if you've been in it for a while, you got this is a nice setup, man. I mean, it's at the lower end of its consolidation. We came down last week with some big volume, 4.3 million. What's done, which it needed to do. It had to get below that, which it did. You know, so no, I like the setup, man. This is a good stock. You know, this will make its way back up to the 95 area, and you're at 85, 90 right now.
The only big concern I had was I think they're supposed to be reporting here in a couple of days.
That's
you got
all right.
any sense of that? No problem there?
Yeah, let me show you something. This gold stock here, by the way, folks, okay, this is one of the, not only a premier gold stock, but I'll show you something that the guy that started this, I've interviewed this guy many times. I know this guy really well. And this guy here, this is his position. So picture this. He owns 770,000 shares, 67 million. You don't see that in the gold market. You know, you see that in tech stocks.
I agree. No,
you know, this guy is...
It's nice having a CEO having a $70 million position in the company.
And this guy, I'll cut to the chase quick, just because I can't tell the whole story. But when South Africa had apartheid, He's the guy, he was the minister, and he's the one that had to split up all the mines. So what happened is that the way he ended up with Rheingold, he could not take any mines that were in South Africa. That's how this worked, okay? So what ended up happening, he took all the mines that no one wanted. Well, guess what? The mines that no one wanted were in West Africa, and it was a very dangerous place to be.
Okay.
It's a great story, man. He's told the story when I've interviewed him. The last time, this is many years ago, it's like 7 years ago that he told the whole story, but he really knows what he's doing too, man. If you're in a gold stock, Rheingold is one of the best ones out there, man.
Hey, just a quick follow-up. I mean, since I guess I'm trying to figure out your gold report, was there just too many picks, and that's why you didn't have this in your gold report?
No, we had it. We had it. I made money on it, and we got stopped out of it.
Oh, okay.
Yeah.
So it's just a case, but you didn't add it to the most recent one for no particular reason, I guess.
That's right.
Okay. Great.
Hey, great one, man. Have a safe one. Stay right there. Our man, Mr. Basil Chapman's coming up next. Then we get swim lessons, Steve Rhodes, Dave White, myself, Andy Heck.
Thanks, man.
Thanks, pal.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.